Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I wanted to give you a weekly update. It's Sunday evening. Uh, in a perfect world, I'd like to get it to you sooner in the weekend. However, I think it'll be helpful going into the new trading week. So, with that, let's get into it. We got eight current buy recommendations, and I'm going to start with a home run because if I don't tout it myself, nobody else will. So, this is Platinum, which we got involved in back in late 2024 at, let's call it $83. And you can see this big up week last week, up 11, almost 12%. And currently we have about a 73% gain in Platinum. And I would just want to real quickly touch on, 18 months ago, it might even have been 20, 21 months ago, saying that this commodity boom would be the biggest that it's comparable to the 70s, which was the last huge bull market in commodities. And so it's kind of coming to fruition again. I think some of the metals will start, are hitting some pretty overbought conditions and will need a break. I went to neutral on silver 2 weeks ago, maybe a little bit early because it's been up. Platinum for sure. Gold mining stocks, gold, those were all suggestions on the YouTube channel. Recently, I've been talking a lot about oil, crude oil, which I don't have a buy rating on yet, but we're using uh, the commodity index DSG currently is one of the buy recommendations that I'll talk about, which is 60% energy. So there may be kind of a handoff that might start happening from some of the metals to uh, into energy and while they should all do well, but anyway, I wanted to toot my own horn here on Platinum, up 73%. Everybody wants to own it now, but nobody wanted to buy it back here. And I'm not going to go to a neutral rating yet, but I'm really, really close. What was I doing last week? Selling more uh, down to, 2, 3%, where I was at 6 or 7% down here. The reward to risk is no longer that favorable, and we've actually hit our price projection of 144. So that tells me that, could it go higher? Yes. But you can see when this thing corrects, it corrects really in a quick way. So you got some big volume last week. And you can see here the last time we had those big volume bars was right before a correction. So I'm going to be monitoring this real closely. And I'm sure I'll be going to a neutral here soon because there's some other opportunities with a better reward to risk profile than this at this point in time. Still a buy rating. Exelon, this is one I did an update on intraday, just showing, again, this was the big descending triangle, descending resistance line, flat support line. And when we broke out, we went to a buy rating, got a retest of that breakout, went up in a big way, and we were selling on the way up. We talk about that weekly. And then we got a correction and said I was gradually adding back into this. And now, after a few zigzags here, you can see it looks to me like we're forming a triangle, which is normally a continuation pattern. It's usually a fourth wave in the Elliott wave sequence of five waves. And so maybe we get that push higher if we measure this and we project upward. If we get a breakout, we get to 51, which is our price projection of this big triangle. So, and at that point, I'll be doing like I did in Platinum, So with Exelon, it's an individual stock. I had probably, I don't know, 3.5, and with appreciation up to 4% in Exelon, and then probably brought it down to, 1%, and then started building that up again. I'm probably at 3% approximately currently. And so that's kind of where we're at. I think this is a close-up of that triangle. And here we have a confluence of moving averages, a rainbow convergence, a bullish rainbow convergence with prices above that. And I said on, I believe it was Thursday, that this was a good place to buy because if it can hold this, it promises a higher high. And maybe then we get the breakout of this triangle, we get up to 51 or whatever. So right here, your reward to risk is very favorable. And I like that. So still bullish on Exelon. Verizon, still bullish on Verizon. This is a 1, 2, 3, 4, 5, 6 month symmetrical triangle, and we broke out and we went up, and I said, let's sell some, sell some, sell some. So again, this was probably 3% of the portfolio, got down to 2 or so, and now I've been adding and probably back up to 3 on Verizon. Again, the position size is up to you. I can't cover all these on the call that I'm currently long, but I try to give you the best ones. So this needs to get going here. I don't want to see it break 43 or 42. I really don't want to see it break 43. So that's kind of where we're at. The upside is good. So we got a $50 price projection. That's about 15% higher. But on the initial recommendation here, if it does get up to 50, it will break out of a much larger pattern, suggesting much higher prices. And so if we get up, a few points here and it looks like, the trend is up, I will start to cover the bigger pattern and the bigger reason why I want to own this stock. And, Exelon has I think it's 4.5 to 5% dividend. Verizon 6 to 6.5% dividends. So, I like that too. Still bearish on the S&P 500. We're down, let's just call it maybe 3% from going bearish here. So I'm still maintaining this. We still have a negative divergence, but this has to happen. We got to get going on the downside because seasonality will be ending, negative bearish seasonality will be ending here in a week to 2 weeks. And again, seasonality is just a tendency, but it is something that you want to be aware of. So still bearish on the S&P 500. Chevron, I've redrawn this trend line as a flat top, not showing it as a breakout as it was, but I still think the trend is up. We're in a small triangle here also. Um, and point and figure chart is on a buy rating. And so I'm going to keep a 152 stop here. We got long at 157. We're right now 157.42. We're at 160. So again, I think there's some energy stocks and ETFs that have broken out already, and so bullish on Chevron. Wait, the upside here is great if we can break out of this. Because I've raised the resistance line on the triangle, actually the price projection would be higher than 212. It'd probably be closer to 220. So the potential upside here is big, over 30%. Cannabis stocks. So, this was a big home run. This was getting bullish here. And then after a 50% gain, going neutral, then getting bullish again, and then selling with a 13% more gain, and then buying it back here at a lower price. It's got to hold here. We got to get going. 30 is, I don't want to give back a lot of gains. 30 is where my short-term stop is. This is a daily chart. It goes back about 5 or 6 months. Now let's take a look at the longer term chart. And here we are. This thing was down from like 375 to 20, and it's currently at 31. And here we have a bullish rainbow convergence coming in place. So theoretically, it doesn't have to. This could be prices look like they're coming back to that retracement, and that's a type 2 retracement. So if it can hold this confluence of moving averages, it promises, quote, promises a new higher high up north of 40. But it could come all the way back down to this cluster of moving averages at 20, what is that? 27, let's call it. So I'm not going to give it a lot of room on this short term thing. If it breaks 30, I'll sell, and I'll look it down at 27 to see if it holds. So right now, bullish with a 30 stop on it, and the potential upside is, let's call it 40. So with prices at 31, that's about 30, 369, it's about 30% potential upside on a short-term basis. So again, like cannabis, the upside could be on a lot of these much greater than the smaller patterns that I'm referencing. I think back to Exelon, I think back to Verizon, I think back to cannabis. So here's another bullish recommendation. This tells me that if this holds and this happens, energy will be a big winner because energy is 60% of this ETF. This is the iShares Commodity Index, and this is a big 2.5 year symmetrical triangle. The bigger the patterns, normally, the more reliable they are. And you can see we got bullish there at 22.77. We're at 23.31. So just at the beginning of this, the price projection based on this pattern is about 31. So there's a lot of upside there, north of, let's call it 35% potential upside. And it's got a bullish point and figure chart too. Corn. I've showed you this was a recommendation back on 9/11, so a couple of weeks ago. And the big pattern shows a huge, huge decline. So, again, we're trying to identify new trends before they change. And then once we get into those, we want to ride them until they change. And corn looks a lot like cannabis did. And here we have a small inverse head and shoulders pattern with a price projection at 19. This is just a small pattern, a 2 month pattern. And, we're currently at 17.6, let's call it. So on this pattern, not a huge amount of upside, but when you look at the bigger picture, which I'll share once this gets going, again, again, I think these are potential home runs. Are they without risk? Of course not. But the reward to risk now is favorable. Same with cannabis, same with, Verizon, same with all those that I talked about. Because once they move and they're way up here, then, where do you put your stop? Where do you get out? Where are you going to get out of it if it starts to decline? This is where that your risk is minimal and your potential gain is huge. Seasonality, we're going right into the seasonality boom of corn. Again, seasonality is just a tendency. It doesn't always have to follow that, but you like it in your favor, and you can see this is definitely historically when you want to buy corn. And T-bills, this is the ETF that it is a 3 month T-bill ETF treasuries, and it has little volatility, and it pays, I want to say it's a 4.5% dividend, and I think it goes ex-dividend tomorrow or the next day. So if you buy it then, you get a 1/12 of that dividend. So again, for cash, this is where I'm going with it. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Have a great evening. Adios.